tensions high on Wall Street.
The Nasdaq lost more than 0.75%. The Dow lost about 1/3%, while the S&P 500 dipped 0.5%. Markets are bracing for today's Federal Reserve meeting. Investors are betting on an interest rate cut to help ease a global credit squeeze. So we want to get more on that Fed meeting. Adam Bobroff is a trading manager at Foremost Currency Group, and he joins us now. Adam, thank you very much for being with us. It's a very risky time, isn't it? And it seems as though the stakes are really high. What do you think is going to happen?
I think the question really isn't necessarily whether we're going to see a rate cut for the Fed, but more to the point of how far will it go? Will we see a 1/4 point, or as many people are saying now, will we see a 1/2 point come off? I think by close of play on Friday, futures markets were saying 56% chance of a 1/2 point cut to come off. The US finds itself in a difficult situation between a rock and a hard place. They need to balance credit risk and obviously inflation concerns against confidence in the US dollar, which has been flailing for the past few months anyway.
That's the key word, though, isn't it? Confidence. At the end of the day, what can one read into if the Fed does indeed cut it off by 50 basis points? What does that mean? In terms of confidence?
Well, in terms of the currency, typically you would expect if interest rates are cut for the currency to weaken. However, investors and speculators may take it as a positive point, of course, as it is a corrective measure to the situation they've got at the moment.
But some analysts are saying that's not free money, though, is it?
No, absolutely. I suspect probably we'll see a 1/4 point come off in the meantime, and then they'll assess it from here on to to the early part of next year.
It's interesting because Alan Greenspan, in a recent interview, he was saying the future of the U.S. economy, that is, isn't looking too bright. And that's just, when we look at these, the wording that comes out of these Fed meetings from the Fed chief, you look at the wording, you see, okay, what exactly does he mean by that? It's still not good words from the former Fed chief.
No, absolutely. Well, it's nice to see he's actually come out and said what he thinks now. Obviously, he's in a position where he perhaps doesn't have to be quite so PC and can actually comment more openly. And he's made comments about the UK economy as well to a similar effect, saying that over coming years we could well see interest rates in double figures as a result to try and curb inflation, which of course would be disastrous.
Not a good sign.
No, certainly not.
So what does this mean when looking at future after this? Can we see more cuts? If there is indeed a cut this time around?
I think so. I think over the course of next year we may well see them down by mid-08 down towards 4.25 for the Fed. More than likely. That's pretty low. Absolutely, and from a currency.
Why do you think why do you think that's getting to this point? What's contributing to that?
Well, I mean, it's gone on far too long. Obviously, the major concern is over the US subprime. Lent money to people that essentially can't afford to pay it back is the bottom line of it. And we've got similar effects in the UK here as well. And something does need to be done to correct it. And perhaps the short-term suffer of currency risk, i.e. devaluation of the dollar going way into the 2 against the pound and perhaps 140s against the euro, is something that they have to take on board in order to produce a solution to the current crisis.
When we see what happened to Northern Rock, do you see it happening now? There's speculation with Alliance and Leicester and other money lenders as well. Do you think this a widening effect on the UK economy as well?
Yeah, I think so. Absolutely. Obviously, it's fairly ill-timed with the global stock markets seeing a bit of a push down anyway. And I certainly think that Northern Rock won't be the last one of the bunch to release these kind of figures and have to perhaps be bailed out by the Bank of England. So perhaps the tip of the iceberg of things to come.
Let's feel the earthquake now. All right.
Indeed.
Adam, thank you very much.
My pleasure, thank you.
Coming up in the next half hour here on CNN Today, it's a war of words. For now, France and Iran continue